Hi everybody, it's Chris here from Serene Education. Going to do the 4 majors analysis update for the first week of April 2014. So let's crack on. Let's have a look and see, well, starting with the euro against US dollar on the monthly charts, let's have a look and see what's been happening on the monthly to just give us an idea of where we are, where do we stand going into April. So what have we had? If you're looking at it right now, we've got a couple of days left before the end of the month, and you can see that as it stands at the moment now, we are looking at an indecision candle, a lot more emphasis to the lower end of the candle, but you'll notice the most important thing that's actually happening here is that 61.8 monthly fib level, which I've drawn from my current high here in February 2011 down to my low in 2012. You can clearly see that the 61.8 level has still been a major resistance level for this particular pair. We're going into our 1, 2, 3, 4, 5, 6 consecutive month now where we've seen resistance at this particular level, which is not a good sign. Ideally, we want to see price moving higher, and 6-month high, not seeing any trading above that level does start to put in a bit of concern, because ideally, if you want to be trading higher, which is what we've seen the euro against US dollar been doing for some time now, we want to see highs being formed each consecutive month or week, etc. You can see here on the indicator box, primarily my monthly and my weekly indicators are still looking to the upside, all positive across the board. You can see that the candlesticks are very much blue. I have a blue arrow, blue candles. My RMO is above the 0 level, and my OSMO indicator is above the 0 level. However, it's dark green, and dark green primarily as we've gone into the consolidated range. The 61.8 and the 50 have been a major support and resistance level on both counts. So price, if I just drop down to a weekly time frame and we get a buy signal, you can see that since September of last year, in fact, prices was trading within this consolidated range. The past couple of weeks we've seen a breach of 61.8. However, 2 weeks ago when we had a breakout, that breakout failed to actually find support above the 61.8 to then give us a genuine breakout, which before we had resistance, breakout, pullback, and then the continuation up towards that 78.6. That failed to materialize as our confirmation candle 2 weeks ago, failed to actually close higher, and subsequently what it left us is this evening star formation, almost an evening star formation, where we've had an upside drive candle followed by an indecision candle followed by a bearish candle to the downside. So still trading below the 61.8. So that negativity, or that resistance level at 61.8, still very much in play. Ideally, we like to be above the 61.8. Going into a new month, on Tuesday, if I'm not mistaken, the 1st of April, we would ideally like to, if we are looking for any further buying opportunities, getting above the 61.8 as soon as possible. Dropping down to the daily time frame, you can see here on the daily we have a lot of negativity on a number of our indicators, and the R squared is complementing that negativity, and you can quite clearly see that we haven't seen a new high recently on the daily. In fact, we've seen a swing low, and that swing low has been resistance level highs, almost a hanging man here at the underside of the 61.8, and then we see in the last couple of days a sell-off. Candlesticks are still very much positive. They're still blue. However, we do have a red arrow. So if you're looking at a setup here for the on this particular template, you want the 4 criteria to be in favor. Look at the arrow, for example, it's red. So therefore, if we're seeing a red arrow, then we want to see red candles, the RMO to be below the 0 level, and our OSMO to be below the 0 level. Here we have a red arrow. The candlesticks are blue, so there again straight away we don't have them working together, and our RMO is still above the 0 level. So we have 2 reds, i.e. the arrow and the OSMO, which are negative, but our candlesticks and our RMO are still above. So now we have 2 cancelling each other out, 2 positives, 2 negatives, therefore no trade if you're looking at the daily time frame. And ideally, if we are seeing blue candles, as I mentioned before, we want to be above the 61.8. You can see that price is trading now into a consolidative range that we saw in February of this year. So as it stands at the moment now, the bias still favors the upside. However, you can quite clearly see that near term we have had price falling. And if we see price failing to get above the 61.8 anytime soon, therefore the bias will start to shift from positiveness to one of negativeness or bearishness. So that's what we're looking for going into the new week, is obviously price, if it's to be remain positive, to get above the 61.8 as soon as possible. Failure to do so, and we still see current new lows, highs pointing to the downside. Therefore, the sentiment or the bias will then start to shift from more positiveness to more negativity, and then we can start looking at potential targets to the downside. If that was the case, then we should be looking back towards our monthly fib level here at the 50% level, which also is complemented with the institution moving average on our daily. I'm going to move on to sterling now on the monthly. Here again, you can quite clearly see that on a monthly, we do have the bias still favoring the upside. There seems to be more positiveness on our indicator box than negativity. The one thing that strikes us right now, if you're looking at what's happening on the monthly compared to what's happened in the past on the monthly, you can quite clearly see that price is now testing a prior major support and resistance level, which goes way back to 2008, in fact. It's also complemented by the monthly fib level here at the 50% level, but I also have the institution moving average in that area. So we have two resistance level areas or major indicators that are imposing a resistance level, and you can see that we had a positiveness, we had a very bullish stance going into this area. However, price still for whatever reason actually fell back quite aggressively. So that in turn, if we're looking at potential setups in sterling, our bias should still be looking for upside. However, we have to be quite vigilant because we are trading at a major support and resistance level that goes way back to those 2008 highs. So resistance in the past has seen price pulling back. So now if you look at the actual setup of the candlestick right now, let me just zoom in so you can see it. The past month very positive, getting above the institution, but stopping or trading above the actual monthly fib level. But when the close of the month actually closed, you can see the price actually closed below that monthly fib level at 50%. Here again, we saw a pullback for the first start of this month of March. However, going into the end of March, you can see the bias still favoring the upside. We are seeing a bit of negativity because price is still failing to close above that monthly fib level, but it's also trading above the institution moving average. So now if I'm going to drop down to any smaller time frames, I want to be well aware of that monthly fib level, the monthly institution moving average on that time frame. So I'm just going to draw a horizontal line on that 200 period moving average on my monthly. So now if I drop down to my weekly, you can see that the bias is still favoring the upside. The candlesticks are still very much positive. I do have a blue arrow as my last candle. My candlesticks are positive. My RMO is above the zero level, but my OSMO indicator is below the zero level. And that's going to happen because the OSMO is going to be more of an aggressive indicator. It's far more aggressive reacting compared to the RMO, in fact. And you can see that because we haven't made any new highs, ideally, in this case, breaking above the monthly fib and closing higher, we've seen a lot of resistance here on the weekly. That would then obviously offset the OSMO indicator, and that would then show us a negative scenario. Okay, so this week, in fact, actually closing higher, so almost actually engulfing the prior week of negativity. And if we are to see any positiveness long-term or any trade sentiment long-term, we would want to see sterling trading above the monthly, in fact. Near-term, we have seen a positiveness. We can see the indicator box is still favoring the upside. Our RMO is still very much positive. Our MA down the bottom of here, which is plotting the institution moving average, is working with the RMO. So we know that trend-wise, we're looking at strong trends from a monthly, weekly, daily, 4-hour, hourly, 30-minute, 50-minute, and 5 minutes. So the bias still favors the upside. And if we go down to our daily time frame now, you'll notice that the past week, in fact, has taken away all that negativity we saw the prior week. But if you're looking for an entry on the daily, we want to see those four requirements. That is the arrow, candlestick, RMO, OSMO, all working together. So if you look over here, for example, and you're looking for your arrow, you'll notice that I don't have a blue arrow. I have a red arrow. The last arrow on here happens to be red. My candlesticks are positive. My RMO is above the zero level, but my OSMO is still clearly below the zero level and dark red. So I don't have the four criteria that I'm requiring to give me my first indication of the biasness. So if I'm getting a red arrow, I need to see red candles, but they're blue. I need to see the RMO below the zero, but it's above. I need to see the OSMO below the zero level and bright red. It is, but it's dark red. So now you can quite clearly see that I don't have a genuine sell, but I don't have a really genuine buy because I don't have a blue arrow yet. Okay, and my OSMO is not above. So I'm clearly trading in an area where there's likely to be consolidation of some sort. And if you look at where price is trading right now, compared to where we've been in the past, or come from in the past, you notice that price has consolidated at this level in the past. So now I'm going to go, well, how does that happen? So what I can do, go back to my weekly now, you'll notice that I have a low point, and you can see we've had an uptrend since May, June of last year right up to this point right now. So I can draw a monthly fib level from that current low to the current high. And if I can find the current high on the candle, which is up here somewhere, this is a weekly fib level, so I want to make it the same color that that allows me to then know what it is. And I've chosen a red for my weeklies, blue for my monthlies, so now I know exactly which colors these monthly fib levels are, and I can gauge where price is trading in conjunction to these levels. So now if I drop back down to my daily, there we go. Now you can see that I'm trading both below a monthly as well as a weekly fib level. So as long as we're seeing that, ideally we want, if the candlesticks are positive and the overall sentiment of here, my indicator box is telling me I should be looking for buying, then I should look at where price is trading right now and go, well, okay, the bias looks like we have a pullback, but I don't have a blue arrow, and that arrow is vitally important because it's part of the actual strategy that we have applied here to the FX8 Ultimate. So I'm looking for a blue arrow. The candlesticks are positive, and if we can get above this prior major support and resistance level here near term, then we're going to start seeing the blue arrow starting to form anytime soon this week. I need to wait for that vigilantly, and then what I can do is then target my monthly fib level, which is still a healthy 98 pips away. I'm not going to get all of it because by the time I actually do get an arrow, it's going to eat into some of that profit, but it allows me then to gauge out, okay, great, in terms of risk and profitability, and then you work out the rest. But you'll notice that my monthly and my weekly fib level are above price, so we do know for a fact that we have a major resistance level above price. So it's going to take a lot of momentum, positive momentum either from sterling or very negative momentum from US dollar to get me above those levels. So what do we have coming up this week that's of vital importance for this particular pair? Well, we have, it's the first week of a new month, in this case April, and what happens on the start of the first Friday of a new month? We have non-farm payroll. But not only non-farm payroll, Thursday and Wednesday are also vitally important because they are huge days in terms of data. Friday we know is the non-farm payroll, however Thursday we have the interest rates announcements for both sterling and for euro. So very, very important. We got to be vigilant about because of that news that's coming out, and we have to take that on board. And then on Wednesday we have a lot of news in terms of euro as well as the US market, because we have factory orders, etc., for the US market, but we also have a lot of people speaking for sterling first thing on Wednesday morning. So in terms of looking for any buying or any trading opportunities from Wednesday through to Friday, here again, if you are a novice at trading, then I do recommend you guys actually standing away and waiting for the news to come out. However, in this case, we would want to see some really, really important figures either complementing sterling to push her higher, or we want to see some really weak figures from the US market to push sterling higher. Okay, so that's what we're looking for the bias this week. Moving on to the US dollar Swiss franc for on the monthly time frame, here again you can see that the candlesticks very much are still red and have been for a long period of time. Okay, you can see that, but we have seen a major consolidation recently, which has taken the best part of 2011 right through to right now in that aspect. We haven't seen any new highs recently, and what's happened, because we haven't seen any new highs, then the bias has obviously remained negative, and that in turn has actually formed lower swings. You can see the indicator box over here, the long-term sentiment, like our euro against the US dollar, where the euro against the US dollar was positive, here you can see it's quite clearly negative, and that's where the correlation comes in between these two pairs. So our overall sentiment for the US dollar against the Swiss franc, I should still be looking for selling opportunities, because on my monthly you can see if I need the four requirements: arrow, candlestick, RMO, OSMO, you can see the candlestick is red, sorry, the arrow is red, candlestick's red, RMO is below, and the OSMO is below and bright red. So clearly everything is still pointing lower. And if you look at where price is trading right now in conjunction to the monthly fib level, you'll notice that price is trading just at the underside of that monthly fib level here at the 38.2. So now if I drop down to my weekly time frame, straight away I get a sell signal on my weekly chart, and if you look at the weekly, everything is negative and the R squared is complementing that negativity. But I just want to draw on a weekly fib level here because, as I mentioned to you, you can quite clearly see that we've had a major bounce when I say recently, back in 2011 to the current highs here that we saw in 2012. So I want to take a fib level reading from that current low in 2011 to the current high in 2012. If I just pan back to the hard right edge where price is trading right now, you'll notice that I have both my monthly and my weekly fib levels complementing each other, which then forms a major support and resistance level depending on which side price is trading at. You can quite clearly see leading up to this point we saw a lot of support, and there has been a lot of support through the years. 2012, in fact, February, we had a support level here, through 2013, in fact, and just recently we saw a lot of support through the latter part of 2013 going into the new year. And right now, you'll notice that right now, just pulling back, you'll notice we had a major breakout recently. But the last 2 weeks we've seen positiveness for the US dollar against the Swiss franc in terms of pullbacks. So now you can see that price, even though it's negative, the candlestick's still very, very negative on the weekly chart, you can see that price is trading back up above the 38.2 level, which is also that monthly fib level. So if I go down to my daily time frame now, you'll notice that the candlesticks on my daily are still red. However, if you're looking for the 4 indications, which is arrow, candlestick, RMO, OSMO, so you've got a blue arrow now. So therefore we need to see blue candles. That's not the case because they're still red. And the RMO needs to be above the 0. That's not the case because it's still below the 0 level. However, my OSMO is above, and that's more positive. This is more an aggressive reacting indicator. So here, if this is to be just a fake out that we've seen just recently and the bias is still looking for US strength going forward, then what I need to see is blue candles and my RMO to get above the 0 level. Until that happens, my bias is still looking for negativity. We are still trading above monthly and the weekly fib level. However, I need, if this is to be a genuine breakout with highs to come out of it, I do need to see candlesticks turning blue as soon as possible. You'll notice that the last Friday, in fact, actually closed very, very negative in terms of a doji, where the open and close were pretty much smack bang on each other, but that's still come on the upside. So now dropping into our intraday time frames, going down to a 4-hour, etc., you'll start to see that bias now starting to reflect on the positiveness. Here you can quite clearly see the candlesticks were positive even before we broke above the institution moving average, even before we actually made that move above the monthly fib and the weekly fib level. Now you can see that blue arrow, blue candles, RMO above. However, the OSMO is still very weak. But you'll notice that we are above the institution moving average, we're above the moving average monthly and weekly, so that bias is starting to reflect. And if that's to be genuine sentiment, long term, going into this very, very important the first week of a new month, then we need to see price actually staying above these two levels, around about 88, 40, 10, 4110 area. If it can stay above these two levels over here, going into the end of this week, then we'll look to see if we can actually see some favorable non-farm payroll figures for the US market, which will then push price higher against the Swiss franc, or we're going to have some negative news coming out of Swiss franc to still push prices higher. But not because it's being the first Friday of a new month, you'll probably favor that we're looking to see any US dollar positiveness or US dollar negativity or bearishness to give us a further indication where price is likely to go to. The same would happen on the US dollar Japanese yen. Moving on to the monthly time frame here, you could see that we saw a very, very bearish setup from 2006 down to the current lows. 2011 we saw a lot of support being forged. We had some fantastic figures the start of 2012, in fact, on the non-farm payroll figures, funny enough, which then led to this upside and price and then testing the monthly fib levels to where we are now. Currently, however, we've seen price failing at the 61.8. We went into this tweezer top railway tracks where we had positiveness followed by bearishness. This bearish engulfing candle engulfing the prior month, which is not really, really good. However, you can see that the candlesticks are still very much positive on the monthly time frame. And if you look at the indicator box down the bottom here, you'll notice that there's more positiveness than negativeness. So our bias should still be looking to the upside. Okay, so then if I drop down to my weekly time frame, you'll notice over here my weekly, my RMO and my institution moving average are working together here, so I should be looking for a strong uptrend, and you can see we have been a strong uptrend. We did have a wedge formation that we traded within for a number of months. That subsequently was breached going back to October, November of last year, in fact, and then we saw prices getting above that monthly fib level here, the 50% retracement level. So then our 61.8 was a valid target area. Prices have failed to get above that level and subsequently formed lower swings, and that's where we're in now. You'll notice that looking near term, there's been a lot of consolidation on the formation side. We haven't made any new lows, and we haven't made any new highs, and you can quite clearly see on the weekly, you can see that consolidative range. If I go down to the daily, it becomes even more predominant, and if I draw a shape here, rectangle, you can see that prices have been able to break lower and slightly higher, but here lower but still above the institution moving average, which wouldn't have been a genuine sell indicator. Ideally we'd like to get below the institution moving average, so any selling here you would be doing against long-term sentiment, therefore adding more risk, and subsequently you can see that the bias was still favoring the upside. However, near term you can see that we've been in a consolidative range. So here straight away on my week I have a blue arrow, blue candle. My RMO has just popped and closed higher, which is important, but my RSMO is also bright green. But you'll notice that in terms of where price is trading right now compared to where it was in the past, it's still within that consolidative range. I'm more than happy to give that back to the market now because I want to trade cleaner air. I'd rather trade above this current high that we saw here going into March of this year, in fact. So anything above the 103.60 would be a fair close point, because then I could trade less risk and then back up towards my 61.8 level to the upside, and you're looking in excess of 188 pips. I'm not going to get all of that, but then it would allow me to suffice that I can look at least into about 150 pips of that. I don't want to be trading within this consolidated range because there's obviously more risk attached, and I'm not seeing any major return on investment for time invested. You can see here since January, if you've been trading this long, you wouldn't have really got any major return on time invested. In fact, you actually might have been triggered out a couple of times. You might have stopped out. So rather give that back. There's obviously clear indecision on the market for the US dollar against the Japanese yen. Why trade it? Rather box it, tag it. When I say tag it, support resistance level high, support resistance level low. Oops, apologies, I've chosen the wrong indicator. So there, and then wait for the breaks. Okay, you can actually get the actual template to trigger you when we have a close high or lower. That's all I'm interested in. I haven't traded the US dollar Japanese yen for months, primarily because we've been trading within consolidative range, and it's just not the way I like to trade. So rather give it back to the market, wait for a close above 103.60, wait for a close below the 150 mark, get below that institution moving average, then I'll definitely start looking at it. Otherwise, what you could do is take on more of a riskier, more aggressive stance, is to trade the range. Trade within this range, but if you're well aware of your risk, well aware of what's likely to occur in that time frame, then you could still be quite profitable. Just be well aware of the risk attached to it. That's it, short and sweet. The four majors, non-farm payroll, first week of a new month, April. A lot of news from Wednesday to Friday. I do recommend, if you are new to trading, not to trade it at all. Rather stand aside, rather get an idea of what the market's likely to, where non-farm payroll figures have taken us, because the outcome of non-farm payroll will then allow us then to look what could be the overall sentiment for the remainder of April. So going into the second week of April right through to the end, we could then get a bias of where the positive or negative stance lies, and then we could trade that outcome. So that's it. Hope you have a fantastic trading week. Nikki and I are away trading with some students on Tuesday, so we won't be around, but from Wednesday onwards we will be back with you in the forum, for example, and I'll do my analysis during the course of the week. Hope you have a fantastic week. Trade serenely.